Hello everyone, welcome to Sam's Summaries. This episode is a deep dive discussion into Sam Fury's summary of Chapter 2 from the book Crypto Swing Trading by Jide George. It has been created with the help of AI. The chapter is titled Market Analysis Techniques. You can read the original post at samfury.com.
Okay, so we're diving deep into crypto swing trading today.
Sounds good.
I think a lot of our listeners are really interested in this topic.
Yeah.
Especially, how to actually make some, profit.
Right.
So you sent over Chapter 2, Market Analysis Techniques, from the book Crypto Swing Trading by G. George.
Yep.
And, this chapter summary really kind of hits on, one of the core challenges.
Yeah.
Crypto markets are known for being just chaotic.
Extremely volatile, yeah.
So how do you even begin to make sense of it all?
That's where market analysis techniques come in. The author really stresses that even in the middle of, all this craziness, there are patterns and signals that you can learn to identify to, hopefully make profitable trades.
Okay, yeah, that's what we want. So let's break down how to do that.
Yeah.
The chapter starts with technical analysis.
Right.
And I'm picturing, reading these charts kind of like they're this secret language that you have to decipher.
It is. It's like a language. Yeah.
So how does that actually work?
Well, technical analysis is all about understanding those visual cues. You mentioned charts.
Oh.
And one of the key things that the book talks about is candlesticks.
Okay.
And candlesticks are a way to visualize price action over a specific period of time.
Right.
So say you see a green candlestick on a chart. Now, the length of that candlestick, or the body of it, tells you how much the price went up during that time.
Okay.
But then you also have these little lines sticking out the top and bottom. They're called wicks.
Okay.
And those wicks show you the highest and lowest prices that were hit during that period.
So you could see the range of the price action during that time.
Yeah, so it's really like a snapshot of the battle between, the buyers and the sellers.
So you can actually visually see that playing out on the chart.
Perfect.
That's cool. So what else should we be looking for on these charts then, besides candlesticks?
Well, one of the most important things to understand are support and resistance levels.
Okay.
Think of these as price points.
Okay.
Where the market kind of gets stuck.
Okay.
So support is a level where buying pressure tends to be stronger. And so it kind of prevents the price from dropping further.
Okay.
So that could be a good potential entry point for, a swing trade.
Okay, so the price kind of bounces off of that.
Exactly, yeah.
Okay.
And then on the flip side, you have resistance, which is where selling pressure tends to increase. It's hard for the price to go above that level.
So if you're in a trade, that might be a good point to get out.
Yeah, exactly. So understanding those support and resistance levels is really key.
All right, and I'm starting to see how all these technical tools can kind of work together.
Yeah.
The book also talks about moving averages, which I'm already a little bit familiar with. I know about the 50-day, the 200-day.
Yeah.
What's the deal with those, and how do they apply to crypto swing trading?
So moving averages are kind of like trend filters.
Okay.
They smooth out price data.
Okay.
And they give you a better sense of the overall direction of the market.
Okay.
And while you're, the 50-day, 200-day, those are commonly used, especially for long-term investing.
Right.
Since we're talking about swing trading, which is more short-term.
Right.
You might want to focus on shorter-term moving averages.
Gotcha.
So like the 10-day and the 20-day.
Gotcha.
And the idea is that when a shorter-term moving average crosses above a longer-term moving average, it often signals that an upward trend is starting.
Okay.
And vice versa. If it crosses below, it could be a sign that a downward trend is beginning.
So if I'm trying to, make profits in the short term, I should probably zoom in a bit on the chart.
Exactly. Look at those shorter time frames.
Okay, got it. The chapter also talks about, RSI and MCD.
Yes.
And I'm not super familiar with those. What do those add to the mix?
So those are momentum indicators.
Okay.
And you can think of them as kind of confirming your suspicions about a trend.
Right.
So the RSI, or Relative Strength Index, it measures the magnitude of recent price changes.
Okay.
And it can help you evaluate whether a cryptocurrency is overbought or oversold.
Right.
And then you have MACD.
Okay.
Or moving average convergence divergence.
Wow, that's a mouthful.
Yeah, I know, right? But it helps to identify potential trend changes.
Okay.
By looking at the relationship between two different moving averages.
Okay, so it's all about, different tools kind of working together.
Exactly.
Yeah, okay, that makes sense. One thing that really caught my eye in the chapter summary was the section on volume.
Yeah.
Yet, is that as important as it sounds?
Absolutely. Volume is critical because volume reflects how much of a particular cryptocurrency is actually being traded,
Right.
At any given time. And so if you see a sudden spike in volume, especially if it's like coinciding with, a price breaking out from a support or resistance level,
Right.
that can be a really strong signal
Okay.
that there's a lot of momentum behind that move.
Yeah, so if everybody's suddenly interested, something's probably up.
Something's going on.
Okay, that makes sense. The author really emphasizes using multiple indicators.
Yes.
Across different time frames.
Right.
Why is that so important? Why not just, pick your favorite indicator?
Well, you know how the saying goes, don't put all your eggs in one basket.
Yeah.
It's kind of the same idea here. If you're only relying on one indicator, it can be misleading.
Yeah.
But if you're using several different indicators and you're looking at them across, different time frames,
Okay.
it helps you to validate your findings.
Right. Get that confirmation.
Exactly. It increases the probability of successful trades.
Right. You got to do your homework.
Yeah.
Okay, that makes sense. Now let's shift gears a bit and talk about fundamental analysis.
Okay.
So I'm curious, how do you actually go beyond just like looking at charts to really understand what a cryptocurrency is actually worth?
Yeah, that's what fundamental analysis is all about. So it's like diving deeper into the intrinsic value of a cryptocurrency.
So it's not just about, what the price is doing.
No, it's about understanding like what's backing it up.
Right. Okay.
And one concept that the book highlights is tokenomics.
Tokenomics. Okay, I've heard that term before. What exactly does that mean?
So you can think of tokenomics as like the economic model behind a coin. Like how many tokens are there? How are they distributed? What utility do they offer?
Okay, so you're looking at the supply.
Exactly.
You're looking at the use case.
Yeah. What problem is this coin trying to solve?
So it's not just about hype. It's about understanding the mechanics behind it.
Absolutely. Yeah.
The chapter also mentions the importance of looking at the team behind a project. Why is that so crucial?
Well, unfortunately, the crypto world is full of scams.
Yeah, there are definitely a lot of those.
Right. And so looking at the team, you want to see a strong team.
Okay.
A transparent team. Ideally, they have a proven track record.
Okay, so they've done this before, hopefully.
Right. And they have a clear vision for the project. That can be a really good indicator that it's a legitimate investment.
So it's not just investing in technology.
Right.
It's investing in the people behind it.
Exactly. You're investing in people.
And you mentioned due diligence earlier.
Yeah.
But, with so many new coins popping up all the time, how do you effectively kind of filter through all of that noise?
That's a great question, and it's really important. You don't want to just get caught up in the hype.
Right.
You have to do your research. You want to look at the project's white paper.
Okay.
Understand what its use case is. Evaluate its potential real-world impact.
Okay. So really think about, is this actually going to do something?
Exactly.
Okay.
And in addition to that, you can analyze on-chain data.
On-chain data? What's that?
So this is like data that's recorded directly on the blockchain.
Okay.
Things like transaction volume, the number of active addresses.
Okay.
That can give you insights into a project's actual usage.
Okay, so you see if people are actually using it.
Exactly.
Not just, holding it and hoping it goes up.
Right, exactly.
So it's like being a detective, in a way.
It is. It's very much like being a detective. You have to investigate.
The chapter also mentions something else that can impact a coin's value. And that's the overall market sentiment.
Yeah, this is huge.
What does that entail?
So even if a coin has strong fundamentals.
Okay.
There are all these external factors that can come into play.
Okay.
So you have news events, regulatory changes, even, tweets from influential figures.
Yeah, I've seen that happen.
Yeah, all those things can sway the market.
Right.
So for example, maybe a project announces a new partnership.
Yeah.
That could send the price soaring.
Okay.
But then on the other hand, maybe there's news about a security breach.
Right.
That could trigger a massive sell-off.
So it's like the whole crypto world is kind of connected.
It's all interconnected, yeah.
In this intricate web.
Yeah.
That's fascinating.
It's very complex, very dynamic.
The author stresses that combining both technical and fundamental analysis is the real key to successful swing trading. Why is that?
Well, because imagine you've done your fundamental analysis, right?
Okay.
You found a coin with a strong team, a good use case. You believe in the project.
Okay.
But then technical analysis can help you pinpoint the best time to actually buy and sell that coin.
Okay, so you find a good project.
Yeah.
And then you use the charts.
Exactly.
To figure out, okay, when do I get in, when do I get out?
Exactly. It's about timing the market.
So you need to be a bit of an artist and a scientist.
A little bit of both, yeah.
Well, this chapter summary that we just explored was packed with information.
It was dense, yeah.
We covered how to read charts, how to evaluate a coin's intrinsic value.
Yep.
And, really the importance of staying informed about this constantly changing landscape.
It's always changing.
But this is just the beginning, right?
Oh, yeah. This is really just scratching the surface.
So where do we go from here?
Well, as you delve deeper into crypto swing trading, you're going to start to develop your own unique trading philosophy.
Yeah.
What's important to you? Do you want to prioritize short-term gains? Or are you more focused on, long-term growth potential?
Right.
How will you manage your risk?
Yeah.
How are you going to navigate the emotional roller coaster?
Right, because crypto is definitely emotional.
It can be very emotional.
So those are all things that, our listeners should really start thinking about, as they continue their journey in this wild world of crypto.
It's definitely an exciting space.
Absolutely. Well, this has been a really fascinating deep dive.
Yeah, my pleasure.
And I hope, everyone listening has learned some valuable insights today.
Me too.
And until next time, happy trading, everyone.
Thanks for tuning in to Sam's Summaries. If you found this episode useful, let us know with a like, follow, and share. Also, if you haven't already, be sure to visit samfury.com to get free access to all of Sam's original summaries, which you can download as PDFs, as well as other exclusive content. It's all completely free at samfury.com.